This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
And if, under property losses, your expenses exceed your income, then in the income tax computation you need to put in a nil. Do not ignore. And then the property loss is carried forward to offset against future property only. You cannot have relief against any other incomes. Now, I mentioned earlier that finances you don't get as an expense now. You get these as a relief from your tax. So, just to reiterate, finance costs are not a deductible expense from property income. Instead, relief is given as a basic rate tax deduction from the individual's income tax liability. Basic rate deduction applies to 100% of the finance costs that relates to the property. Now, there are some special rules. It must be to acquire, improve or repair a residential let property, acquire equipment, assets used for the letting business. Okay, not for companies or furnished holiday lettings. The rules are different for that. So we have an example. So if in 23-24 a taxpayer incurs mortgage interest expense of £5,000 on a property that they let out, none of it is shown as an allowable expense against the property income. Instead, it will achieve tax relief as a deduction at 20%. So when you do your tax computations, you work out at 20% and you work out at 40%. And you get a total. Then you get this tax relief. And you would show the £5,000 interest at 20% because you need to show how you've calculated the figure. And that 1,000 would then come off your tax bill. Okay, so let's have a look at an example of how this works. Dora House has employment income of £60,000 in 23-24 and rental income received of £10,000. She paid maintenance expenditure on the property of £800 and mortgage interest charges of £6,000. What is her income tax liability? Okay, so let's have a look what her income tax liability would be in that situation. So let's have a look at her. We're going to do the working first. What is their property income? Some people like to do all their workings first. Some people like to lay out the model answer and then do all their workings underneath. Doesn't really matter, whichever suits you best, as long as you clearly show whether you're doing a working or whether you're doing an answer. Sometimes I find it easier to set out the model answer, to answer the easy bits, slot them in, and then do the workings for the more complicated bit. Again, that's a focused approach on trying to get as many marks as possible in the time that we have. So we have rents received, £10,000, less the expense of the maintenance, okay, so that's my working. Now the question was asking for an income tax computation. So Dora House has an income tax computation. 23-24, and again make sure you put your heading in so that the examiner can see clearly that you are what you're working on. So we have employment income from the question of 60,000. Now all of this is classed as non-savings. Okay, so that's why I haven't put all the headings in, because we're kind of getting to the point now where if you've done the previous chapter, chapter 2, then you will know all about this. If you haven't done chapter 2, then you need to go back and do chapter 2, otherwise this may not make sense. We have property income. Label it up W1, because then you make sure you bring the correct figure down. She's going to get a full personal allowance because she's below the limit. So this is her taxable income. So she's high rate. Okay, let's have a look at how her tax calculation looks. So we do the non-savings. So that's what it is. Okay. Basic rate 37,700 at 20%. And then the balance is at high rate of 18,930. That's at 40%. Just check that that all adds up. Yes, it does. Okay. That is 7,572. So that's her total tax liability so far. However, back to the question, less relief for interest. Always keep going back to the question to check that you haven't missed anything. 6,000 at 20%. She's getting tax relief for that there, giving a tax payable of 13,912. Excellent. Let's go back to where we're at then. Okay, furnished lettings. So there are special rules for furnished holiday lettings, and in order for these rules to be applicable, you have to fulfill certain conditions. These are the conditions. It must be available to let for at least 210 days of the year, actually let for 105, and no one person occupies the property for more than 31 days. We're talking furnished holiday lettings here, as differentiated from furnished property. So you must be doing this on a commercial basis. So you must be obviously advertising, you'd be part of one of these search areas where you can, it's easy to find your property. And the 31 days rule, most people go on holiday for a week, maybe 2, sometimes 3, stretching it to 4 weeks, which is only 28 days. If you're there for 31, you're now into 5 weeks. Okay, so it's probably a short-term let rather than the holiday lettings. So that's kind of a caveat, a barrier to whatever. Kind of question you're going to get, you might get a multiple choice question that gives you a property that's been let out. It's furnished. It's been let out for these number of days, but it's been available for these number of days. Does it qualify or not? True, false. It qualifies. No, it doesn't. So 210, 105, 31 are the days that you need to do this. Now, normally on a cash basis, but you can do it on an accruals basis. The same rules apply as they did in the previous examples that we've looked at. Now, there are some then benefits if you have one of these, because it's treated as a trade. Okay, it's treated as a trade. So you can have capital allowances if you're doing an accruals basis, and then a deduction for what you pay for. You don't get the replacement relief. So basically, when you furnish it, what you put in, you get relief for straight away. It's pensionable income as opposed to property income, which is not. That's classed as investment income to a large extent, because you've invested in a property to get income out of it. But furnished holiday lettings treated as a trade and therefore pensionable. So if you look into the pensions chapter, you will see how that works. Capital gains tax. Now, there are lots of chapters on here, and there within those chapters you'll see rollover relief, gift relief, business asset disposal relief. Those reliefs may not mean anything to you yet, but if you've done when you've done those 3-4 chapters on capital gains, that will make sense. You could then come back here and tie the two pieces of information together. The more you do tax, the more you will see that you need to tie in what happens with income tax with what happens with capital gains, particularly capital gains with inheritance tax. And that, once you've learned the basics for each individual tax, as you move on in your tax knowledge, perhaps do advanced tax, you'll learn to combine these taxes and the rules to come up with a situation where that would be necessary. Losses can only be carried forward against profits from holiday lettings. You can't have them against other property, and it must be within the EU or within the UK, and it must be made on a commercial basis, as I explained earlier. Okay, one more aspect for income from property that we need to do is rent a room relief. So you are renting out one room in your house, you're still living there, and basically the first £7,500 is exempt. There are two methods of calculating the expense and the income. There's what's known as the normal method. So this is the normal method, which is the cash basis, which we've seen. The rent you received, the expenses you paid. Received, paid. Exactly the same as previously. However, you can elect. Now, this election has to be made by that date, and then it stays in force. Now, what you do there is the rent that is received less rent a room relief. And that's very useful if your expenses are very minor in relation to this room that you are letting out. And example number 4, we have a lady here who's renting out one room, £650 a month times 12, 7,800. So that's her income, and that's her expense. So two methods of calculating this. The normal method, income less expenses, and that would go in her income tax computation. However, if she elected for rent a room relief, 7,800 less 7,500, I think she'd rather go for that one, don't you? Which would you choose? Which would you choose? So that's how rent a room relief works. So let's move now on to lease premiums.